helpful. Kiana, so there's a lot of people that are trying to buy homes for the first time.
Mhm.
So you as a realtor, what are some tips that you can give for first time home buyers? Like what should they have in order? What are some common mistakes that you're seeing for people that's buying homes that just may not be knowledgeable of like what to do and what not to do?
I personally think some common mistakes are one, you're choosing the wrong real estate professionals to represent you. Shout out to and I say that, shout out to my agents. I say that to say because when you get the right agent, they know how to finesse your offer in such a way where you'll win. Oftentimes you think it's all about, oh, I just got to spend over the purchase price. And a lot of times it's the relationships. A lot
Mhm.
of times it's also other parts of the offer. So when you're meeting with your loan officer, don't just get pre-qualified. At this point, you need to be just a little step further than being a pre-approved as well. I need you to have gone through underwriting. We need to be able to give you a very short contingency on your finance, 7 days or less. So that way your financing contingency is in place to protect you. Under normal circumstances, we could do 21 days, 30 days financing contingencies. Nobody flinches. In this market, they're looking for 4 or 5, 7 day financing contingencies. That means when you choose your lender has to do the work up front before you actually even get to the house. They're going to have to really dig into your financing up front and do a lot of upfront work when really it's hard to do because we're all busy, but you got to find a lender that's willing to put in the work so you can have an attractive offer out here. Um, I think that we want to just delete seller's contribution from your content from your conversation.
They're about to
The
get
seller,
at you, Queen.
the
I,
sellers are not
Down,
I
they're
was
not
there.
doing it.
I
Yeah.
was watching it. I was watching it.
I saw it. I was seeing it blink out. Like the sellers aren't contributing.
Yeah. I was,
So you just can't. The sellers aren't contributing to the closing
And
costs because they
it's
don't have
the
to.
champion is.
And I think that we miss the mark because we think that they're supposed to, where in reality the rules say they can. That doesn't mean they have to do it. I can contribute and I am going to contribute is two different things. So if you're competing against 5 different offers, and I want to break it down in layman's terms, if I'm trying to sell you this apple for $5, right? And Troy, you told me to give you $2 to buy my $5 apple. But Rashad, you said I'm gonna give you your full $5, and then Matt was like, "Forget both of them. I'm giving you $10 for this
Yeah,
$5
yeah.
apple." I'm going to Matt, and that's how the sellers are looking at it. And a lot of times I think we're forgetting that the sellers are in this to sell their property and become earners. They want to earn. They're trying to make money. So get you the right agent to help navigate, and then also make some sacrifices. I feel like a lot of times that we start, you got this idea of a certain specific house in a certain area with the picket fence and the pool. And I think that we have to step back and say, you know what, let me look in different adjacent areas that may not have as much demand. That way you can be more successful in your endeavors to purchase a home because it's going to be the hottest house on the block and the top rated school district is going to be very difficult for you to compete against. So let's just kind of navigate and just say, you know what, owning a property with the way that appreciation values are throughout the country is much better than renting. So let me change my expectations and get somewhere adjacent so I can own a property and just make that first step towards building generational wealth.
Let me add on that one, right? So Kiana said the inventory is at 1.2, 1 month, 2 days of inventory,
Yeah.
right? So for you first time home buyers or anybody that's out there in the marketplace, stop looking at new listings. Number one, you need to start looking at listings that's over 30 days because something's wrong with that
Yes.
property. There's something happening. There's a reason why it hasn't sold or under contract. So number one, those are the properties that you guys should be going after. Number one, days on market. Pay attention to that. It's on every Zillow listing. Your realtor can provide you that information. That is a key. If you see anything above 60 days, that might be your opportunity to get in this crazy market. Number two, Kiana's speaking more about the retail market, right? When you're going to have those shiny houses, those swim communities, et cetera, et cetera. You guys got to stop looking at the retail market and go to the distress market. Go to the market where, hey, in that neighborhood, in that swim community, there may be a home or three that may not have all the updates that
Yeah.
that you will want. And now you have to use rehab loans, 203Ks, Fannie Mae home style, whatever you pick your poison, right? To now go ahead and get the renovation and mortgage in one loan and get a fixer upper. Those homes from what I'm seeing with my business, my buyers are winning their offers because there's less competition, because people are afraid to do renovation, to do rehab. They don't know they can get the rehab money. They think it's too expensive. They need to move in tomorrow versus being a little bit patient and moving in a couple weeks or a couple months. That's where you guys want to play at. If you want to get in this market, you have to start thinking like the investor and stop playing where everybody else is playing. When everyone is going right, you need to go left.
Absolutely.
You know what I'm saying? And there's opportunities out there. You just gotta have patience and have the right real estate professional, like Kiana said, that has their pulse on the market and know how to find these properties.
Can I share a secret real quick?
Go ahead.
If a house is worth 100 and Matt bids 125, and then like Kiana said, if Rashad bids 150, everyone write this down. That is called a limit up. I'm gonna share a secret. There's a reason why I started with The Big Short. The number one market maker right now in the rental community and the buying of these assets, Blackstone, JP Morgan, Berkshire Hathaway. So when I've been telling you guys for all these months, you need to learn how to invest and how to trade, because guess what? The easy gains came out of the stock market. Now, where did they go? Real estate.
Real estate.
So now that's why I always tell you guys, it's not one or the other. It is both. I'm always say it. I'm telling my dad, I messed up. I should have listened. He was teaching me this. Some Boys in the Hood was out and I did not listen. I'm like, I don't want no properties for $800 a month. And I'm like, I could have had 80 properties by now. It's both. But now the biggest players in stocks and investing are buying these and pushing these prices up. The reason if interest rates go up in 2023 and they have to readjust their books, be careful, because if they let these properties go that they are then renting, and they go into all these other tranches, or they flood the market because of a crash, an opportunity will be there. But I want you guys, even when you're buying a house, you have to know who the market maker is. Elon was the market maker for Doge and partially Bitcoin. The hedge funds are the market makers for real estate. Trust me, they have both down to a science, real estate and the stock market together. They are not separate. They are a team.